Hey folks, it's Vic Noble here with your weekly trade example for the week ended October the 28th, 2011. You know, one of the biggest problems that I've seen people have over the years that I've been coaching here at Forex Mentor is over trading. And I'm going to show you how to avoid it here. Some really good tips on it here. So just kind of listen up here. And the best advice I can give you is to get off of the smaller time frames. It's a killer. Figure out what's happening on the higher time frames and take your cues accordingly. What kind of stuff do you want to look for in a higher time frame? Well, first and foremost, I would say look for support resistance. That's more important than anything. Okay, support resistance levels, key levels that have proven before to be to hold as support or as resistance. Secondly, I'd watch for market flow on the daily chart. Market flow is a concept that I introduced to Forex Mentor members and the community here like 6 years ago. And I know a lot of other people are using it now, and that's great, but I actually started using it back in the 90s, in the early 90s. So it's a great concept, and basically it's a way of determining trend direction without using any technical indicators at all. I really like it. It just uses pure price action. So I used market flow, and the other thing that you want to watch for is candlestick action. What are the candles telling you? And are they bullish? Are they bearish? Okay. Now let's just run through a little bit of this here. In this particular case here, this I'll just start over here, it doesn't really matter, was a resistance level. Price goes down. When price came back up to it, I want you to see notice what happened here. If you wait for the daily candle to complete, look at this. It went blowing right through it here. What does this tell you? It tells you that, you know, we're on our way up to the next resistance level here, and the next resistance level was right in here. See what this used to be? Support, support, support. And we expected it could be resistance when it gets here. After this day here, start looking for bullish intraday patterns. Okay, I'm not going to get into all the different patterns you could look for because I teach all that stuff in the coach's corner and whatever. But and when it gets to here, what could you do here? Start looking for reasons to sell intraday because we're at resistance. And if it, you know, it may or may not keep going up, but watch your 4-hour candles, and I wouldn't go below that even. Just stay on that and see what they set up like. And then down it goes to where? It goes down to what used to be resistance, now becomes support. You get that? Don't be trying to sell any more around this 7,900 level. And you can see what the candle does here. We get a spinning top, we get another spinning top. So this is a consolidation in here. The market flow is now up here. So buying is the way that you want to be looking when you're at support. In this down this level here, look for buying opportunities. It comes up again. This time, what does it do? It goes right through it on a closing basis. If you wait for the daily candle to close, where does it go to? The next level of expected resistance, which used to be support here and here. Okay. In fact, I tell you what. This is the 24th of October. Let's go have a look and see what the 4-hour candle chart was doing. Because you're expecting there to be resistance there. That's right here. See this? Now what is this? Is that bullish or bearish? We're at 8,100 the figure. Go back to the daily. I want to just show you this. 8,100 the figure right here. See that? That's an important level. The figure is always important. Go to the, especially when it lines up with other factors like old support resistance, fibs, all that kind of thing. Inverted hammer or pin bar, whatever you want to call that. This is negative stuff here, right? You want to be looking to sell this as far down as 7,900 because that's where we saw there to be support on the daily chart. If we go to an hourly chart on this, I'll just even show you even further. Here's the 24th. Look at this candle action. Inside candle, this is 8,100 the figure. Resistance, inside candle, this is negative. You want to be looking to sell in here. You know, I mean, gee, I can tell you right now, there was VIC trades in here. There was a really nice VIC trade right here. I got even actually emails from people in the coach's corner that took this trade. That was awesome. You know, where it goes down to, remember I said 7,900? Actually didn't quite make it, did it? It made it to where? It made it to these lows right here. See, so you can, by looking at these other charts, you can get clues. Price is going lower like this, MACD's going higher, we got positive divergence setting up, and away it goes up here again. Today, I'll just show you what I did here today. Nothing spectacular, believe me, but actually, when it came down to this level here on a daily chart, remember, I'm watching to see what happens on the daily candles here. I want to know where my resistance levels are, my support levels. This could have been a support level. It was actually in here. But this time on this day was a tremendously bullish day. With the news out of the Eurozone was that things were going to be okay and they're going to come up with financing to help everybody out and all that kind of stuff. But the stock market was flying. And that's another very, very important point. You really, really must consider the market mood. What's going on with the major markets? What are they telling us? Stock market was way up on all stock markets in the world, like huge. And this thing went flying up at, where did it stop? Resistance. Do you know that coming into today, which is the 28th of October, everything was very subdued, which you can imagine after a day like this. So what happened? I had a bias to, if a shorting opportunity set up, the pattern I recognized, I'd take it. Well, I did. And what it was is on the 15-minute chart, look how the prices were going higher into that resistance on the daily. It drops down, and what I did is I sold the rally up here. I sold it at 82.23 is exactly where I got in at. And it just fooled around. I just actually took it off here a little while ago I took a, you know on how much I made today? I made a 1 pip profit. The reason why, because it's Friday, nothing's happening. I'm not hanging on this thing over the weekend. But the point is it was a pattern. I took it and didn't lose any money on it, and I took it based on what the higher level 1 day, the daily chart time frame was telling me. The whole point of this weekly trade example, I want you to realize that if you will watch these candles and support resistance levels on the daily chart, you're going to avoid over trading, and you're going to really identify the levels that are truly important and not all the garbage on a 5-minute and a 15-minute chart. I'm not saying, I mean, definitely you can use those charts. I did today. But don't use them first. Use these first. Use this chart first. Then go to your smaller time frame and just don't take trades unless you're at key levels. Anyway, I hope that was helpful for you guys. Let me know. And you know, if there's something else you want me to cover in one of these weekly trade examples, tell me that too. I'm happy to do that. You guys have a great weekend. I'll be back at the end of next week with another weekly trade example for you.